So we saw a significant spike in the price of gold and silver today, and maybe it'll stick around, maybe it won't, but if nothing else, it's a pretty big clue for what's coming. So inflation was flat month over month. Not a big story, it was just slightly below expectations, but that was enough to give another boost to gold and to silver price. Add to that the recent Treasury auction fumble and the 10-year Treasury yield falling, and gold actually has a few things going for it. And that's beyond the war premium that was already seeming to let go. So prices were already on the way down, and then we get the Moody's warning. Moody's Investors Service cut the ratings outlook for US government from stable to negative, which sounds like a pretty big deal, but apparently not so much, because outside of a small and short bump, the markets pretty much just shrugged it off. And we've already seen this. Standard & Poor's and Fitch have already thrown those flags. Apparently people don't care because US Treasuries are still the most liquid game in town. And by town, I mean the world. So we're back to watching the Fed, what they're likely to do, and then when they're likely to do it. Before we get back to it, if you're looking for precious metals, hit up SD Bullion. New customers even get gold and silver for spot. That's sdbullion.com/new. So just starting off with the likelihood of another rate increase in December, going off current data, that likelihood is low. And that's going to be the biggest factor behind the jump in gold and silver price today, as we've seen higher interest rates lead to higher yields on Treasury products, stronger dollar. That would mean lower investor demand for gold, but it's not what we're seeing. October inflation numbers aren't signaling any kind of rate increase. So no news is good news. A flat month for inflation can actually spike the price of precious metals. It's kind of a weird place. Since 2020, we've seen price volatility on 2 regional wars, on a banking crisis, and then on Fed decisions, or even anticipation of Fed decisions. So if you've been thinking that it's a little bit strange how much these Fed decisions have played into the price of precious metals, well, you're in good company. Now, the biggest surprise in gold is probably just how little actually happened in 2023. We didn't get that year of the rabbit bounce. Analysts were saying that we would see a Fed pivot this year in 2023, and that would have been the widely prophesied signal for gold prices to head up, but we didn't even get close to that. Now, next year could be an interesting one. I hope I'm not jinxing anything by saying that. I just mean in terms of the Fed's benchmark rate and what that means for gold. Now, the most recent hot take from Jerome Powell is that he wasn't confident the Fed had done enough yet. That was to get the inflation back down sustainably to the 2% target. So, no pause. I think that's the big message. Not out of the woods yet. And speaking of not being out of the woods, we have UBS analysts forecasting Fed cuts to a target range between 2.5% and 2.75% in 2024. That part sounds pretty good. It's about half where it is today, between 5.25% and 5.5%. But the notable part there is that they think it's coming out of necessity. They're warning of disinflation and rising unemployment, weakening economic output. And it sounds like code for recession, but it's not even code. They came out and said it. And this is a lot higher than other analysts are calling for, a lot sooner at least. But if you've been waiting for this pivot, UBS thinks it's coming soon. So if you like lower interest rates and higher gold prices, 2024 could be your year. The actual year for gold. And it's unfortunate that we need a recession to get there, but UBS makes a pretty strong point saying starting conditions for 2024 are a lot worse than 2023. Now, I don't give too much credit to any single point of analysis, and I think it's worth noting that UBS is a lot more negative on the US outlook than average. So UBS was probably given the headline spot because they were on the extreme. And maybe you agree with that extreme, but you have Goldman Sachs saying something different. They see the US economy expanding by 2.1% in 2024. That's not recession territory. So everyone has an opinion. What I see as important here, though, is that regardless of what the analysts think will happen to the economy at large, most agree that the Fed will pivot on monetary policy. They just do that for different reasons. It's the hard landing versus the soft landing debate. But either way, if inflation returns to target, the 2%, monetary policy should loosen up. And in most of those cases, we could expect to see gold get that chance at the next leg up in price. Again, no guarantees we're going to see the price of gold shoot up next year, but if we look at what happened today with gold spiking almost 2%, it's like 1.8% right now, that happened only in anticipation of the Fed staying cool, not raising rates further in December. And that's a clue on what would happen when the Fed actually signals they're paused or even ready to pivot and cut rates. So until all that happens, this is all probably just short-term volatility. We're going to see ups, we're going to see downs, and I think more than anything what's happening today is just really a clue on what could happen in 2024. So I moved some gold on these recent bumps in gold price, but that was really just me liquidating specific coins, basically being opportunistic to swap to some other things, some choices that I should have made in the first place. If I was really looking for a trade, like full trade, I'd be waiting for that pivot. Honestly though, this is all a long hold for me. I'm not waiting to get out. So ignore all the other news for a minute. Today's data made traders more confident that we wouldn't see another rate increase, and gold spiked immediately 1.8%. I won't even give a guess on whether or not that'll stay. I'll just say that the important part is being able to read the clues. Treasuries, they might be the most liquid asset in the world. Again, not my words, but they aren't as shiny today as they seemed a week ago. And inflation might be a really boring signal. It definitely is for me, but it still has the most significant impact on gold outside of black swan events. So if you want to have any idea on what's happening with gold price, what's going to stick around for more than a week or so, it's definitely worth paying attention to. So let's call it good there. Let us know what you're up to. If you're on the edge of your seat for these kinds of bumps and dips, if you're preparing for something more significant next year, or if your timeline is long enough that really all of this will just be a blip in the grand scheme. Let us know what you think. And then while you're in the comments, be sure to hit the like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.